Welcome to ThinkTech on OC16, Hawaii's weekly newscast on things that matter to tech and to Hawaii. I'm Duke Oishi.
And I'm Lori Wingard.
In our show tonight, we'll cover the Hawaii Angels, an organization of local investors who invest in Hawaii startup companies.
We'll meet some of the longtime angel investors, their executive director, and some of the startup entrepreneurs they have funded.
For the development of technology companies, startup capital is essential, and angel investors play an important role in providing that capital.
Angel investors are usually well-heeled, qualified investors who, as they say, can afford to lose the money they invest. There aren't all that many around, and you may or may not know any of them. If you're a startup, you definitely want to know or meet some of them.
Because of the risks involved with startup companies, angel investors generally look for a return significantly greater than they would find through investment in public companies.
Sometimes angel investors form groups by which they can more efficiently discover and vet startup companies to invest in. The Hawaii Angels is just such a group.
Since the Hawaii Angels was founded 10 years ago, they've funded some $40 million of investment in local startups, mostly tech companies, and they're still making investments even in the current recession.
Tonight, ThinkTech will take you behind the scenes of the Hawaii Angels and introduce you to some angels and those in whom they invest, so you can understand how they find each other and how they interact in the process.
First, we spoke with Rob Robinson, who literally wrote the book on angel investing when he was at Harvard, who founded the Hawaii Angels 10 years ago and who still plays a central role in its activities.
It sounds like this has been refined over the years, and what you're doing today is not particularly the same as what you were doing 5 or 10 years ago. And I wonder if you could describe the evolution of this process.
Yeah, well, we'll be 10 years old in February, and we've probably seen, several thousand business plans. And so there has been a little bit of an evolutionary process. I think we've gotten a little more streamlined. We understand what the strengths and weaknesses of our own group of investors are, and so sometimes we can say to people right off the bat, look, good luck, but you just don't fit with the interests of the group, and so on. I think the follow-up process we formalized a little more so that we do have this formal third Friday of the month where we sit down with the companies and have created a space on the calendar so that people know to keep that clear and come to those meetings. I'd say generally everything used to be a lot more informal in the beginning. The screening, the presentations, and particularly the follow-up were just very ad hoc, and if there was somebody in the group that really liked a company, they might advocate for it, but we didn't have a real structure around that. Now it's I think a little more organized. We have subcommittees for screening and subcommittees for operations and things like that, and so I guess inevitably we become a little more bureaucratic, but also a little more efficient, I think.
What about the membership of the Angels? Over the 10 years, I expect that the number of Angels has grown, but have they grown in terms of the intensity of their investments?
Well, we've certainly been subject to the same market forces that have affected everybody in this economy. When we started back in 1992, there were about a dozen of us, and they were mostly young, tech-oriented people that helped me start the Angels. And then over time we grew and attracted perhaps some more established folks. We sort of hit our high watermark probably in about late 2007. We had about 100 members. Currently we're at about 80. The downturn in 2008 and the subsequent economic problems we've had, I think we've shed a few members, and also things like the Act 221 tax incentives have now expired. So, but we're still a vigorous organization, and there's been less investing the last year and a half or so because I think of economic anxiety and also just lack of liquidity. We've had years where we invested in the $8 to $10 million range, and we've had years where we've invested $1 million or $2 million, depending on the economic circumstances.
Are there companies in the pipeline, that could turn into bonanzas even now?
Well, we certainly hope so. I mean, as I said, I think we've become more realistic in our perspectives, and we obviously perhaps are less oriented around the home run than we are, if, to extend the baseball metaphor, doubles and triples. But certainly there are companies that have the potential ability to go public. I don't think I'm telling any secrets when I say a company like Sopergy, for example, has talked about filing to go public at some point, and could, be a significant return for our investors who are fairly significantly invested in that company. And then there are many companies, I think, that have the potential to be acquired for significant multiples. Most companies, when they have successful exits, are getting acquired. The IPO is a very rare event for any company.
Then we spoke with Ben Woe, a veteran businessman and angel who has been investing through the Hawaii Angels since it was organized.
What's a good pitch and what's not so good?
Well, for us, we really only have, we have a short attention span, and we're not as, angels are not as, I don't know what you call it, technically knowledgeable as people think. So we're basically there to make money. We're listening for an idea that makes sense. We're looking for a team that we believe in. In 15 minutes is pretty much what we give, 20 to be more accurate, but that time frame, we want something that's easy to understand, we get it, it has a chance to make a lot of money, and there's a team there that knows how to get there. So those are the simple things. It's just got to pique our interest. That's the main thing. Just get us interested. Don't have to convince us of everything in 15 minutes, because that's just too much to accomplish in 15 minutes. Just get us interested, get the major idea of what the company's going to do and how they're going to do it, how they're going to make money, how they're going to give a return to the investors, and that's it. Because from then on, if you've accomplished that, you've done your job. Because what's going to happen after that is a bunch of investors, hopefully a lot of investors, are going to want to talk to the company and the entrepreneur even more, maybe have several follow-up meetings, and do some other due diligence with customers or suppliers or other people in that industry. And a few weeks later, or however long it takes to do that investigation, we'll come to the decision, hopefully a positive one, to invest in that company. I've done some in healthcare, some in software, some in film. It's kind of all over the place. Internet.
So it's subjective.
Yeah, but I'm just saying, I'm not going in looking for a certain thing. Yeah, I'll hear any pitch. I guess the only twist would be it kind of have an affinity toward Hawaii-based. Most of the deals we see are Hawaii-based. Mm. It's a local entrepreneur in many cases. So you kind of want to support that effort. If it weren't for that, I would just go and invest, public equities in the stock market, mm-hmm. and just try to make money that way. But the reason I got involved with Hawaii Angels is that a lot of the companies we see are local, and you want to, if you find some good ones, you want to put some money behind them.
Am I right to say that part of your motivation for being involved in considering these investments is to help Hawaii?
Yes, that is part of it. I would say above that is the money, is the return on investment.
We also spoke with our old friend Bill Spencer, another longtime Hawaii Angel who has served as a director of the Angels and frequently as a mentor for entrepreneurs.
Like all companies, early stage financing is critical. Most startups will never get venture capital funding. It's very rare. And so, as you know, entrepreneurs first start out with friends and family and former friends, as they like to say, and then the next step is once you've got your concept formalized, your business organization and structure taken care of, then it's time to get this early seed stage money, which typically comes from angels. And Hawaii Angels, which was formed back in 2002, really is the only place in Hawaii, the go-to place in Hawaii for this kind of early stage funding. And angels are typically entrepreneurs themselves who've made their lot in life, and they're looking to help other entrepreneurs get started. Sometimes they can roll up their sleeves and help. But in my company's case, it was definitely part of the early finance continuum. We were able to raise enough money over a few years, mostly from angels, to really validate the technology from a conceptual standpoint, to really formalize our business plan and our execution plan, to get over the startup hump, and even to fund the 5-year process of getting our patent and getting our permits. It's not something that a venture capitalist is likely to fund. They'll fund later stages of the patent process, because once they've invested in you, they want to build a strong IP. We call it a barrier to entry. They want to make sure that no one else can easily copy what you're doing and take market share away. Venture capitalists want you to dominate a market. They don't want you to just be a 1% of a $1 billion market. They want you to dominate. And the only way you can do that is build up your intellectual property portfolio.
With patents.
But Angels plays a critical role in Hawaii. We've got 80 members throughout the state, and it's growing. We have sponsors from various organizations that want to see this, and a lot of great entrepreneurs might never get funded if it weren't for the Angels, and I'm lucky to be one of them. Angels looks at about 200 deals a year. 100 of those just aren't ready for angel investment. Another 100 get invited into a screening committee meeting where they present, and the screening committee makes a decision as to whether they're ready for a full presentation to the angel group. And then, if they get invited to present, sometimes one of the screening committee members works with them, mentors them, helps them polish their pitch, works on deficiencies in their plan, so that when they present to angels, it's a quality presentation that's ready to receive money.
No discussion of the subject would be complete without meeting Chenoa Farnsworth, the executive director of the Hawaii Angels, who has been with the Hawaii Angels from the beginning and who is a longtime angel herself.
So what's it like?
Mostly it's a lot of fun, actually.
Everybody says that.
Yeah, well, that's why we do it. If it wasn't fun, we wouldn't do it. New entrepreneurs with new ideas and new technology is inherently exciting and fun. And then the group as a whole kind of takes a bit of an irreverent and fun attitude with it, so that they don't take it too seriously.
I know the personalities who might contribute to that.
Exactly.
So you need to have those kinds of personalities in the room.
Those are the keys, and it wouldn't be the same without them. We do have a lot of meetings, but it's pretty systematic at this point. So we're fortunate in that we use an online system now called Gust. It used to be called AngelSoft, which is actually a free software program that was developed by the New York Angels. And most angel groups around the country use the same platform, so it's very helpful for the entrepreneur. They can do one application and send it to multiple groups, and it puts all the applications into a database for us that's searchable, and etc. We can go online. Our screening committee goes online and vets the deals before we even ever meet with the entrepreneurs. There's a rating system, 5-star system on multiple metrics that we go in and rate all the deals. Which allows us to quickly and easily kind of take a look at what we're interested in. And we can invite those entrepreneurs in to our screening committee and have a preview, and we give a lot of hopefully valuable feedback and mentorship to the companies that do come in through that process, even if they never end up actually presenting to the whole membership, but only make it as far as the screening committee. I think they get a lot out of it.
So you're the first executive director of Hawaii Angels, and you've been with them, I think, from the beginning or close to it.
Yeah.
And I just wonder if you think that the Angels, in Hawaii, as you know them, as you operate them, is sustainable in terms of, on the one hand, qualified investors who are willing to write checks, because it isn't going to happen unless they are.
Right.
And on the other hand, entrepreneurs and deal flow that actually happens. And I think, from the outside, it would appear that on both sides of that issue, there are questions as to whether we can sustain the investors and whether we can sustain the deal flow. And you're right there at the intersection. So what do you think?
Well, I think obviously it could be better than it is. It was better previously, both because of the economy and because of the tax incentive laws that we had in place. That being said, however, I think entrepreneurship is something you can't stop from coming. You know, it's like Christmas. It's going to come anyway. People are going to try to start new companies and have their brilliant ideas and continue that process. On the accredited investor side, again, you know, people are writing less checks than they did for various reasons, but they're still writing checks. We just closed a deal where, you know, our investors put a little under $400,000 into a company, which, you know, shows that we can still write checks. It's harder to get us to write checks right now. Obviously, the bar is higher, but it's still happening.
To round out our travels, we spoke with entrepreneurs who have been funded by the Hawaii Angels, Peter Cannon of Franko Maps.
We've made Hawaii our proof of concept, and we've made either a surf map, a dive map, or a guide map for each of the Hawaiian Islands. And the reason I can say that is Lanai is that close to being done.
Okay, all right.
We've done Molokai as well, and the idea is that a guide map will tell a visitor what to see and do on that island. It's a waterproof paper, sold in stores. There's no advertising here. And in 10 minutes' time, you get a pretty good idea, it's just scanning that, what to do when you go to Maui.
Wow, there's everything on here. Let me see if I can hold it up. I mean, you got more legends and notations than you can shake a stick at. You got a lot of maps. There must be at least a dozen here. So this is
about
great.
100 maps completed to date.
So here you are, and it's 2005, and at some point between then and now, you decide you want to deal with the Hawaii Angels.
Yes.
When was that, and what was the reason?
Well, let me think. At the end of 2010, the reason was that when we first started the company, the atmosphere at the SEC was quite easy for a startup to go public.
Mm.
And
That changed?
Our game, that changed completely. I insisted on proving the concept, which probably was a lucky thing, because if we'd gone public, it would have been onerous in the reporting requirements and the cost of being a public company today. But we felt that we want to grow it, we want to find an exit, we want to bring return for our investors, and so we approached the Hawaii Angels. It's been a very interesting process and a very interesting cast of characters to work with.
I like the term cast of characters. So what was it like? Can you describe it for us?
Well, the starting point with any angel group, I understand, at least it was for the Hawaii Angels, was you go through some screening. So you put together your business plan, and you put together what I'll call a presentation of a PowerPoint or some slides, and you basically tell the story. What is the story of this company? So in addition to the story is what's the deal? What's the deal for the angel investors? Now, an angel investor is only investing for one reason. He wants to make a return. So they're not there to support a lifestyle business or to do or just help somebody along. Rather, there needs to be an exit strategy. Well, we had one, and we worked our way through the screening and made a presentation, and lo and behold, by the end of towards the end of 2010, the Hawaii Angels invested in Franko Maps. We've become a portfolio company.
Did you have a party?
We did, but it wasn't. It was not hosted by Franko's Maps. It was hosted by the distributor, Hawaiian Resources.
Okay, that's great.
A common thread in the Hawaii Angels seems to be that angels are not only well-heeled and akamai about making investments, but who are also good-natured and enjoy the company of their fellow angels and entrepreneurs. They genuinely enjoy getting together to talk business and investment, and that's what makes it fun, and sometimes, once in a while, even profitable.
The Hawaii Angels are an important structure enabling the development of new business in Hawaii. We should encourage them, and perhaps at some point, even recreate an investment tax credit like Act 221 to incentivize more of them to make their investments. After all, as the economy goes, so go the angels, and as the angels go, so goes the economy.
Now here's our ThinkTech calendar of events going forward.
The first thing is that ThinkTech's 4 to 5 p.m. weekday drive time radio series on KGU 760 AM started this month, covering business, Asia, tech, energy, the arts, and government. Tune in and stay tuned to 760 AM every afternoon at 4 p.m. and raise your awareness on ThinkTech Radio.
On Thursday, November 17th, the Hawaii Venture Capital Association and ThinkTech will present the Entrepreneur of the Year Awards at the Plaza Club, featuring various awardees along with remarks from our governor, Neil Abercrombie. Sign up at hvca.org. And now here's Bill Spencer, president of the Hawaii Venture Capital Association, with this week's Spensation.
So, on November 17th, we're going to have a very interesting program on 2 levels. Tell me about it.
Well, Jay, this is our annual Entrepreneur of the Year award ceremony where we like to honor our local entrepreneurs. They have a tough challenge, but they're frankly the leading edge of the economic turnaround for Hawaii. We need them, and they need us. So we like to honor these guys and gals that have really shown that they can take an idea and execute and turn it into a real business. So I know you'll all be excited to see who they are, but we won't reveal that until November 17th.
What kinds of people will they be?
Well, there'll be young people, there'll be older people, there'll be people who've done great things in the energy, biotech, dual use, software, and other spaces such as that. We like to do a broad swath across the various efforts that are going on out there, and I think it's a good thing. And we have somebody very special to help us honor the entrepreneurs, and that's none other than the Honorable Governor Neil Abercrombie.
That'd be great.
You know, he's a very passionate guy. He understands the importance of entrepreneurship to our economy. And this will be a very interesting and I think intimate talk because, you know, we only have room for about 120, 130 people in the room. So it's not like seeing him in a vast venue. He'll be up close and personal, and you'll get a chance to talk to him and really engage, and he'll be a real interesting person to have as our speaker.
No, that's the thing about these meetings, Bill. There's a lot of opportunity for networking, and people do network, and they meet new connections all the time and renew old ones. And when you bring the governor in, then you network with him, and it's not a bad thing to do.
Not a bad thing at all.
And here's our co-working entrepreneurs, Richung Fujihira and Tony Stanford, to keep us current on their latest thrills and spills at the Box Jelly.
This week has been a real intense week. We've been hosting a lot of events, and we've been the partnerships that we've been making, been using our space quite often, which is great. When we see people using our space in ways we don't even think about it, we're already sold it.
Yeah, that's great.
So we had high capacity in here talking. They're using it regularly in the evenings, which is great to see a new mix of crowd. And then also they've been hosting events out of them. One of the events was
We did an API talk on Tuesday. So basically what they do is they introduce an API. This is the Foursquare API. They go over it. They have 3 sessions, and then they do a 24-hour hackathon so everyone can show off all the new things that they learned. And they're going to be doing different API every month. So I think it's a good thing for the community, in our smaller community and the broader community as well.
Absolutely. To go on, we also had Ryan Hugh talk again about IP, which was it was great. We're building a bigger crowd with him every time with every new session, so that's exciting.
Yeah, definitely.
Absolutely. And then also we been able to bring on some new people in our team. That it seems that it's going to be a nice mesh well with us, and everyone's still going to be able to work on their strengths, which is key to our success.
Definitely.
And then we're also having, we brought on a modest investor, which is exciting. So that gives us enough playing room and breathing room to, try some new things. And talking about money, we're even entertaining new streams of revenue. We got a refrigerator. So, you come down, we're doing the honesty policy. You come in, put in a couple dollars, take out an item, and it seems to be working well.
Yeah, so far it's so good.
And so we've been checking out new systems. We got in a check-in desk, and so we're slowly growing, and seeing everything that's needed, which is really great. When we have a minimal viable product, we're able to test all these things out before we go to the bigger space, which is the whole point.
Yeah, which is the goal. Also moving into the next week, we're doing something really cool, or actually it's high capacity doing it, and it's Connect. So there's a Connect is like a video game that it uses like a kind of an eyeball thing so it can see how you're moving, and they're going to be hacking into the Connect and making it do all kinds of other amazing things. And next week, throughout the weekend, so Friday, Saturday, Sunday, we're going to be doing an in-depth, our small team is going to be doing like a mini startup weekend where we just sit down and we just focus on our business and, trying to fix the problems that we have and make adjustments the way we need to make adjustments. So it's going to be pretty fun, and we'll let you know how that goes.
We'll be right back to wrap up this week's edition of ThinkTech. But first, we want to thank our underwriters.
Thanks to the Schuyler Family Foundation. It supports a number of educational, cultural, and charitable organizations, including ThinkTech.
Hawaiian Electric Company and its affiliates Miko on Maui and Helco on the Big Island are deeply committed to the communities they serve.
Galen Ho is a senior executive of BAE Systems, a global defense, security, and aerospace company, and CEO of CBI Polymers, a tech company in Hawaii.
Oceanit, another local tech company, is one of Hawaii's largest and most diversified science and engineering companies.
Okay, Lori, that wraps up this week's edition of ThinkTech. Remember, you can watch ThinkTech on OC16 several times every week. Can't get enough of it, just like Lori does. For additional times, check out oc16.tv.
You bet, Duke. For lots more ThinkTech videos and for underwriting and sponsorship opportunities on ThinkTech on OC16, visit thinktechhawaii.com. Be a sponsor. Help us reach Hawaii.
I'm Duke Oishi. Thanks for joining us on ThinkTech. Aloha, everyone.
I'm Lori Wingard. See you next time.